Welcome to Industry Vancouver, conversations about the residential real estate industry with Andrew Hasman and Jeff Bennett. Andrew, good morning.
Good morning, Jeff, from rainy Dawson City, Yukon. We're on our summer vacation.
Love it.
The rain has been following us, but it's my first time up in the north and beautiful. Wow, it's wide open and lots of empty roads.
Very good.
No traffic.
We're also planning a trip this summer. We're going overseas, Parksville.
Yeah. Anyhow, we're 6 months into the year.
We are. Good time for a mid-year 2026 market
Really
review.
subdued. What's your take on what's going on out there?
The first half of 2026 was not a price recovery. It was a confidence recovery. So sales improved, inventory stabilized, the buyers seemed to come back. Prices, though, still remain below last year's levels. And it's sort of a normal consequence for a recovering market. So confidence comes first, then the activity follows. Prices are usually the last thing to recover. And just to sort of a high point, June sales were up 9.6% over last year.
Yes.
Prices were not up, but
Yeah.
the number of transactions that were moving along. So
So the market's trying to find its legs, it looks like. And as you said, it takes time. I looked at the stats that came out a day or so ago. I looked at the Greater Vancouver stats and then the East and West Side stats, and they're all fairly consistent. As you said, it looks like the inventory levels are dropping, which is a good sign in some respects. And sales seem to be trending higher than last year. Keep in mind that last year, the market fell off a cliff in April. So we're comparing to a very low base in 2025, right? But the uptick is definitely something that we can look and say, hey, are there green shoots out there? Does it look like we're seeing some recovery, stabilization? That's what I think the market's looking at.
I think so too. And with that increase in sales, as you described, we saw the active listings have actually decreased. The composite benchmark price still 6% below June of last year. We did see some price give back at the end of last year. One of the things that we always track is the months of supply, where we were looking at the total inventory, how many properties sold in the last 30 days, and then we calculate the absorption rate. And that's improved from 8 months last year to 7 months this year. And it's not to say that it takes 7 or 8 months to sell your house, just that if no new homes came on the market, it would be 7 or 8 months before all that inventory was absorbed. Now,
is 7 months considered to be sort of on the borderline of a balanced market?
You know what? It's right in that range. So we've traditionally used less than 4.5 months supply, upwards pressure on prices.
Yeah.
More than 9 months supply, downwards pressure on prices. But the balanced market seems to have shrunk a little bit. So we're kind of looking at it now. If there's more than 6 months supply, it's flat or down. Less than 6 months supply, it's sort of flat or up with prices. So we're still in a downwards pressure, but we are seeing things stabilize. Now, there was no dramatic turning point, just a gradual improvement through the first half. So looks like confidence is returning slowly. There's no speculation returning yet. January had weak sales, weak buyer confidence, rising inventory, very few multiple offers. February showed a slight improvement, and then we started to see in March a little bit more stabilization.
We were talking about, as I said, months of supply and this and that. And again, I think we've talked about this before, Jeff. We have to sort of break it down. So if someone's watching our podcast here, and they're in a single family home in the east side that's worth about $2.5 million, what's going on in that market is very different than, say, high-end Coal Harbor condos. That's a different market altogether, right? So kind of using the extreme, right? The listeners of this should be not to focus too much on the general. It's what's going on for your type of home in your neighborhood can be very different than the general, right?
Absolutely.
Generalization, it looks like I see stabilization, market trying to find its legs. And I think that going forward, and we'll talk about this, but we're going to be more glass half full than half empty. be a little bit more optimistic that the fall market's going to find continued stabilization.
Yeah. And I think that's a very good point, that the individual markets within the greater market can be vastly different.
Yeah.
In a healthy market, it doesn't require prices to rise. It just shows that buyers and sellers are starting to agree on value again.
Yeah.
At the very slow time for sales, it wasn't that there wasn't buyers out there and it wasn't that there wasn't sellers out there. It's just the sellers were thinking and the buyers were thinking,
Yeah. There was that differential, right? Yeah.
yes.
Yeah.
And
Contrast of opinions. And it's
totally.
amazing. I mean, this is in any market, but I found in this market, when you've got a property, that were once very, very sought after properties, I'm thinking of some of the lot value properties on the west side, no nibbles, just sitting there. But you know that once you sort of get into that right sweet spot, there's going to be a flurry of buyers out there. They're all out there, sold a couple of properties. And once we got the prices down a bit, didn't take much. All of a sudden, the phone starts ringing and they're out there. They're out there. They're just waiting. They're circling. They're looking for that opportunity because they know the market is, the prices aren't what they were a year ago. That the sellers have got to come down to the current level. Otherwise, you're just going to be sitting and waiting.
And I found, and I'm sure you have as well, the sellers are becoming more realistic. So
Yes.
a lot of those larger, more land-oriented sales, those are under contract, or we got them sold last month. So negotiations are still quite common. Buyers still have a lot of choice, but the inventory as it's contracting is giving a little bit of, I want to say, confidence back to sellers and a little bit of confidence as well back to buyers.
Yeah.
We had another lovely turnkey home, great location on the west side, and we came on the market at a fair price and we had 3 offers on it. And like, just for that good product that's well priced, that's well presented, there's still a lot of buyer activity on those.
Yeah, that's what I find. We just sold something just in the Main Street area. You saw it, you came and previewed it. We didn't have a lot of calls on it. It was amazing.
Yeah.
But everyone that came and saw it in the first week, we had 4 groups that came through in the first couple of days. Everyone, after we got an accepted offer, said, "Oh, if your offer doesn't go through, my
Yes.
buyers are ready to write." That's 4 out of 4. That's
Yeah.
incredible, right? And this is in the 3 million range, east side. So that tells me the people out there that are looking, they're pretty serious and they're looking for that opportunity. And they recognize that maybe that $3 million house that they could buy today, or that's worth, say, 3 million today or 3.1, it was 3.4 a year ago, right?
Yeah.
And interest rates kind of stabilized. But they're recognizing the value. Maybe they don't want to compete, but it's amazing. As soon as something gets tied up, everyone wants it, right?
Hey, you know what? There's nothing like the injection of confidence from knowing somebody else says, "Oh, I see that as value."
Yeah.
And I'm the same way. When I'm out looking around, I'll see, "Oh my gosh, I'm really excited about that." Like, am I crazy? Like, what's happening?
But
And then
sometimes you don't want to be the
somebody
first.
else steps up.
Sometimes you don't want to be the first one to pull the trigger, right? And so,
Yeah,
as soon as someone else does it, like, I would have bought it for that, right?
That's
Yeah.
right. And I look back to the transactions we've been involved with since the beginning of the year, and a lot of them, amazing properties, great values. Buyers have been, that we've been working with, have really been courageous and have really received the benefit of that by being the one that was willing to when everybody else was sitting on the sidelines.
Jeff, I got a question for you. Have
Yeah.
any of your buyers that bought in the last, say, 6 or 8 months said to you, I wish I wouldn't have bought. I made the wrong decision. I should have waited. I could have got a better deal. Has anyone said that?
No.
No, me neither. I
No.
would say the market is alive and well. As long as the seller, the property you're looking at, is priced in the current market, not last year's price levels. It's alive and well. People are out there. They want to own, they want to buy, they want to step up, they want to step down, they want to go sideways. For the sellers, you just got to be at the current level and be realistic.
Yeah, I would say demand has returned, but it's not exploding, but it is improving. And so
Yeah.
the buyers are acting, they're seeing that prices have come off. They're taking advantage of that. What normally happens near the beginning of a market recovery is demand is improving and the inventory is coming off. Now, when I say the market is improving or a market recovery, I'm just saying that the deep discounts only can take one offer because that's all there is. that market is maybe going away. I don't see prices rising anytime soon, if at all, over the next couple of years.
But that's great. I mean, everyone likes to operate in certainty
Yeah.
and in a market that's not so out of balance that you don't know where things are going to be at in 3 to 6 months. You know, that certainty, that balanced market is the best market to conduct business in.
Oh,
There's
sure.
no big surprises, right?
Yeah. Well,
For the most part.
from a buyer's point of view, oh, like, why do I want to buy today if I think it's going to be 10% lower next year? And by a seller's point of view, like, oh my gosh, why do I want to sell today if I think it's going to be 10% higher next year?
Yeah.
Well, neither of those things is probably happening. So everybody can move forward confidently and say, you know what, the timing is right for me. I want to sell now. I'm going to go ahead and do it and take the market price.
So you made a point a few minutes ago, speculation hasn't returned. When do the investors come back?
I think, you know what, I'll tell you when I would.
Has anyone called
Every,
you and said, Jeff, I want to invest in real estate? I actually had a client 3 weeks ago called me and said, Andrew, we're thinking of buying an investment property. What do you think? And, but go ahead, tell me what you're going to say.
So, first of
Then,
all, we want to offer relevant, actionable information. This is not investment advice. We're
yeah,
better realtors and accountants, lawyers, or financial advisors. We do own Vancouver real estate. We like it when prices go up, and we make a fee when we help you buy or sell. And if you're enjoying this, forward to a friend. Now, so when does it make sense as an investor? So, as an investor in real estate, if you already own it, great. Not selling is the same as buying. And if you've already got it in the market, you don't want to incur any tax liabilities and that sort of thing, and you're happy with your cash flow, just hang on.
carry on.
Yeah,
Yeah.
it's buy real estate and wait. Don't wait to buy real estate, all
Yeah.
that. Now, if I'm thinking, yes, I want to invest in Vancouver real estate, and I also don't want to carry it and subsidize the tenant's lifestyle over the course of 3, 5, 6 years while we're waiting for a market recovery.
Yeah.
Somebody who's much smarter than me in real estate told me a long time ago that when it goes along the bottom, that's not actually when you want to buy. After you see that sort of 10% lift in prices, then it's usually, most often, going to carry and continue on. And that's when you want to be in ownership, is in that lift. So,
So you want to watch that. Once the market gains some momentum, we start to see some sort of price recovery.
yes.
Usually it's the start of something, a trend, right?
David's other famous line
Yeah.
is buying in a falling market is like catching a knife.
Yeah.
You can do it, but you might lose a few fingers along the way.
Fair enough. Yeah.
So when I look at all that, they're not buying everything the buyers that are out there. They are buying value, they're buying utility, and they're buying scarcity. So investment condos are a little bit in great supply and there's not a lot of demand. The other part of that equation is that rents are coming off. Yes. We're re-renting our suite right now and values are probably off for the rental. From the peak, 15 to 20% is sort of the feedback that we're getting.
That's substantial, right? That's substantial if
Oh,
if
it's
you're
big,
doing it
right?
pro formas and all of a sudden that can put many people into negative cash flow where they're just, then all of a sudden now the rents aren't covering. The strata fees have gone up,
Yes,
property taxes have gone up, insurance has gone up. So all of a sudden rents have gone down. You can go from a positive to a negative pretty quick, right?
very
And of
quickly.
course, if you got a mortgage, say in 2021 or even 2022, and you're refinancing this year, you're probably refinancing at a higher rate. So you're now also faced with a higher mortgage payment as well.
For sure.
So yeah,
What we are seeing though, detached sales are improving. So townhouses are stable. Apartments, as we said, probably the weakest larger segment.
yeah.
Family-oriented housing is outperforming investor-oriented product. What happened? Why did it happen? Where is it happening? Which properties are selling? As we discussed, if you got something that's in a desirable area, part of a community, it's well maintained and well presented. Somebody can walk in turnkey and it makes for great accommodation for them to live in currently. That's the most active segment of the market right now. And when I think back to the buyers that have bought that we've worked with, almost all of them, in fact, I'm going to say all of them, were buying for themselves to live in and have their life in. Like they were buying accommodation. So they were buying out of need, not out of, oh, well, speculation.
Speculation. Yeah, we're seeing the
Yeah.
same thing. All our buyers are end users looking to move in, whether they're starting a family or and such. But yeah, it's to me, I'm not seeing any speculation at all. It's all people looking with a long-term time horizon. This is their home. Many of them have been given money from mom and dad to help them buy something. That's pretty commonplace in the market right now. Has been
Yes.
for a long time, but continues to be. And those are the buyers that we're seeing. They're serious. They've done their homework. And they're also recognizing that it is a good time to buy because prices have come off. And the question that we always get is, how long is this market going to stay the way it is? Is it going to go lower? We don't know. Buy when it feels right to you and the numbers make sense and you can afford it and you want to get on with your life.
Absolutely.
Yeah, yeah.
So one of the things that I wrote down here was identify where the opportunities exist for buyers, sellers, and investors. We're pretty clear about what is selling. And maybe from the point of view of if I need a home to live in and that's still the time for me to buy, what kinds of things should we be looking at to get the most value and the most potential for upside? I'm thinking about the house, that nice big lot, west backyard, great layout in a very well-maintained, but very original condition. And I look at this and think, oh my gosh, this is incredible value. I mean, it was 800,000 more at the peak of the market. And I think now you can buy it with basically just a cosmetic renovation. You could be living in a gorgeous, beautiful home on a great lot in a very desirable neighborhood. Awesome opportunity for somebody trading up. Like if you're coming out of a more affordable home in one of those communities where there are smaller lots and lower prices, to trade up to something like this one that I've got, it's the gap has never been closer.
No question about it.
To trade up from a small starter home in the east side to a large west side home in South Granville, that gap was always, it was basically double.
Yeah. Well, it was because all the investors buying the lots up as building lots, right? And then
Yeah.
redeveloping them and where that market sort of evaporated. Do you think like with that kind of a house, it's an older character house, maybe it's got lower basement, maybe it's got oven tube, maybe it's got asbestos, maybe there's an oil tank. That a lot of the buyers just don't want to be bothered with those major renovations. They'd rather buy something that's a little easier to purchase. Like we sold one in Kerrisdale, 1990 vintage, kind of a
Yeah.
big old 35-year-old box, but it had all the right rooms. It had the high basement. It was original condition, 1990, but it was a great 4,500 square foot house. And it got purchased very quickly by a local family, going to do a nice big reno to it, but they didn't have to deal with a lot of the old house stuff that the character homes you have to deal with, right? So certain types of homes may be a bit more in demand than others. And again, a lot of those buyers maybe not wanting to be bothered with a lot of just overwhelming renovations. I find there's good demand for those 30, 35-year-old houses.
Andrew, I agree 100%. And when I look at the calculus of buyers and where they see value and that sort of thing, I agree totally. The market is much more interested in turnkey, finished. I can just go in and do it.
Or easy to renovate, right?
Easier to renovate
Yeah.
or not renovate or
Yeah.
anything. So any move you make down the chain towards more work, more uncertainty, it takes out of that equation. But when I look at it, I think, oh, for the same price, I can buy way more lot. And if I'm willing to be entrepreneurial about it and fix the house up the way that I like it, at the end, I come out with what I purchased for way less being way more in value because now I own, after I fixed it, that turnkey ready to move into property with all those
Yeah.
features and benefits.
Yeah.
So I can take that thing that is a little less desirable and buy for better value, and then I can sell it for a higher price at a premium because of all the work that I've done. So
Yeah.
I think that's the value proposition, is that you can buy more land, more house for less if you're willing to do some cosmetic reno on it. And for this one, like the basement's a great height. It's already 3 bedrooms and baths up. It's got cross hall living dining. It's got an open west kitchen to the back. Like all the pieces individually are there that you normally need to fix. This thing has it all already. It just needs somebody to go in and spruce it up and put their own taste on it.
Yeah. I think there's fewer of those buyers out there, just like there's fewer buyers looking for those building lots.
For sure.
And I think that it's local people looking for either move in or not having to do too much. Just keep it fairly simple, right?
Yeah.
And maybe people don't have the deep pockets that they had 5, 6, 7, 10 years ago that they could do those big renovations. They want to keep it fairly simple, you know.
Well, sure. I mean, when money was cheap, it was, oh, what are we gonna, we're going to do a couple of bathrooms and maybe the kitchen and, raise the house up. We'll put it on Laneway house.
Yeah. Oh, one other point is with the big renovations, as you know, and this is probably a huge deterrent. The cost of renovations has gone through the roof, like
Oh, bananas.
everything. And again, for the builders as well, they tell you they can do it 450, 500 a foot, but you're building these multiplexes with all the city charges and all this and that. It just adds up and it becomes very cost prohibitive to
It
be able
does.
to make these projects economically viable.
Yeah. Now, interestingly, detached housing seems to be quietly leading this recovery towards activity.
Yeah.
I think in particular, we've described numerous times, it's the ones that are turnkey, ready to move into and easy to go. So
Yeah.
I think there was a lot of people that were expecting the condos to recover first just because they're more affordable. But right now it looks like detached homes are showing the strongest improvement in activity. And from my understanding, and I haven't got any data to back this up, but just anecdotally, what I'm hearing is that seems to be the case sort of across Canada, that detached homes, those prices just aren't falling anymore.
Yeah.
And there seems to be activity and there seems to be demand to sort of pick them up. And I think to their credit, people are looking and saying, oh my gosh, you know what? This thing's 25% less than it was 4 years ago. It's lower than it was in price 10 years ago. Like, how can I say no to that if I want to live in a house, right?
And then also keep in mind in Vancouver, and I'm sure it's the case in a lot of markets across the country, but we work in Vancouver. There's going to become fewer and fewer single family homes. I mean, they're not
Yes.
building any new ones. And we've talked about this before. If a client says to you, Jeff, I want to buy a new house, single family in Vancouver, in the West Side.
Yeah.
You can't find them. They don't exist anymore because all those old houses are getting torn down and they're all duplexes or multiplexes. So they're not building any new houses. So becoming a scarce commodity, right? I mean,
Yes.
so fewer of them and very few of them that present beautifully, priced well on nice streets. They don't turn over that often, right? People are recognizing that.
Well, because people like living in them.
Don't have to share a neighbor or share a wall with somebody or the strata kind of component, right? So,
Yeah,
right?
absolutely.
Yeah.
We are also seeing a little bit of the move up buyer coming back where, homes have been sold, somebody in a townhouse or a couple coming together, or maybe they're coming from a 1 to a 2, they're coming from a 2 to a townhouse. But I think with the prices coming down, we're seeing people take what used to be a one step at a time and 3 or 4 transactions over the sort of early 20 years of your life. Now that's becoming maybe just one jump, but they're making a major jump because the price compression has made it so much easier.
Yeah. Yeah. And we're finding a lot of these people are also getting, as I said, help from mom and dad. So it's also narrowing the gap dramatically. They can actually make that jump much more easily.
For sure.
Right.
When I look and see as well, townhouses seem to have had the smallest benchmark decline among our 3 major property types. Apartments are probably still the weakest segment, but the apartment weakness is not only about the price. There's higher carrying costs, investor caution, higher resale inventory. We talk about it all the time, the shadow inventory and all the thousands of condos that
Unsold
unsold.
that are not on MLS. So they don't show up on MLS, right?
They are not on MLS,
Yeah.
exactly. So I think once that sort of, let's call it the shadow inventory or the new stuff was added into that, I think the supply and demand absorption rate numbers would be a lot more pronounced in their difference from detached.
Yeah.
Like it's not like there's thousands of detached homes sitting in inventory that builders are holding on the books, but there are thousands of condos. So I think the house recovery and stabilization, let's call it, is well indicated by the numbers that we're seeing. But when we look at the condo numbers of just what's available on MLS, I think that's skewed a little bit by the fact that a lot of the inventory is not actually also
So you're not,
also
we're
being
not getting,
represented.
we're not getting the full picture. There's no question about it. And then there's all the the duplex properties. If you
Yeah.
go back, say 5, 6, 7 years, there were a handful of duplexes for sale on the east and west side. Now they're in the hundreds, a couple of hundred on the east side, a couple of hundred on the west side. A lot of duplex inventory. A lot of it's all new or newer construction. I got to think that's also a buyer's market. I think a lot of the builders are holding out for their prices. But if you're looking for half a house, I think you've got lots of opportunity out there, lots of selection to go by.
Yeah. And I think that's actually a really nice model for living. And to its credit, that's why those prices seem to have stabilized more than a lot of the other ones because
Yeah.
it's new. You can move right into it. There's no surprises. You got AC, new appliances,
Yeah.
finishing. Like it's great. And you've only got one neighbor.
Yeah.
That's not awful.
Yeah. And you're dealing with new construction as opposed to an old house with old house issues,
Yeah, exactly.
right? Yeah.
So I want to say supply is stabilized, demand has improved, inventory is being absorbed more quickly, confidence is returning, and prices haven't started to move anywhere.
So we're now into July. So let's say
Yes.
we're now here in the summer market. Of course, we don't know what's happening at this point because we're in the middle of it or in the beginning of it. But it's going to be interesting to see how the market performs over the next, say, 2.5, 3 months through July, August, September. That'll be to me, it's a bit of a telltale. Are we is this market continuing or are we going to sort of stall out over the summer? People taking vacations, this and that. Still a lot of uncertainty geopolitically in the world today.
Yes.
Market is, stock market goes up and down based on daily news releases as to what's going on out there in the world and with economics and this and that. There's a lot of instability. So
Yeah.
are we going to see this market continue to show legs or are we going to see a stall? Be interested to see how the next few months carry us through.
Yeah, I think so. If we think the first half was not a recovery in values, but a recovery in activity, but activity usually returns and then the prices. So
Yeah.
prices continue to adjust despite improving sales in the first half. Improving sales do not always create immediate price growth. They are a leading indicator, the number of transactions, but prices are more of a lagging indicator. So buyers returning, showing a little bit more confidence, being willing to initiate, being willing to step out and buy something. All of that to me is very positive. We're still seeing prices are down though. So if you're a seller and you want to get sold, the best way to do that is just to make your property as attractive as possible. Do all the things as far as presentation, and then make sure you're priced in accordance with what the market is telling you.
Do you think, with inventory has come off, is that a result of homeowners saying, these prices don't make any sense to me. I'm taking my home off the market. I'm waiting for a recovery. Do you think that's the reason, a lot of reason why the inventories are declining? Like we saw a notable drop in available properties on the market. I think it's down the inventory is down about 10% on average. Is that people just throwing in the towel and saying, my home has fallen too much. I'm taking it off the market. I'm not going to sell it at that price?
The short answer is yes. And when we look at Vancouver, I don't remember what the exact number is, but it's somewhere slightly less than half, if I recall right, of
Yeah.
the people in Vancouver own their homes without a mortgage.
Yeah. Yeah.
I'm just saying that's a very normal thing is, sort of when the prices go up, everybody just assumes that's the value forever and they do all their retirement
Yeah.
planning on the house. And then when you're met with the reality of, oh, well, it's actually 30% less than that or 25% less than that, then you're faced to make a new set of decisions. And so sometimes that decision is exactly as you described. Oh, well, if that's the case, I'll just wait.
Yeah. Yeah. And I think it's very common for a lot of homeowners, how much has my home changed in value? A million off over the last 12 months is probably a good average number for a lot of people.
I think for a lot of the more expensive homes,
Yeah.
more disconcerting for me is how much is it off over the last 10 years? Like if you look at the peak prices of 2016, and so we had
Yeah.
in the middle of that. So it's off from the more recent peak, but a lot of people have been sitting in their house for 10 years and the value
Yeah.
is still below where it was at, 10
Which,
years.
which is unbelievable when you think about it. Everyone always said, oh, buy real estate and you're going to be in great shape. But if you've gone 10 years and seen no appreciation,
Yeah.
that's a long time, right? That's
Yeah.
for a lot of people, especially if you're nearing retirement. Now you want to sort of sell and make some other plans. All of a sudden, you've got to adjust your pro formas dramatically.
Yes.
Oh, and
Now
the
the
other
good
thing
news
is,
is, the
yeah,
good news is let's say that was the case and you were coming out of that house and you thought you were going to have X amount of dollars and then you were going to have to go and buy a big luxury, or not have to, but you chose what you wanted to do was to buy a big luxury condo. The great news is those prices are down even more. Let me ask you a question. Where are you seeing the strongest competition today for homes that people are after?
Yeah. So a good example. I've got a client. We put a bid on a property in Vancouver Heights last week. 1.7 million price range. 1.7. Sorry, no, 1.5 million price range. And we offered 30 over the list,
Yeah.
and they had 10 offers, and it went about 200 over the list.
Oh my.
Yeah, Vancouver special.
Wow.
So again, the market is alive and well.
Yeah.
Good neighborhood, Vancouver Heights or Willingdon Heights, great neighborhood of North Burnaby, nice,
Oh, fantastic.
stable family neighborhood, lovely street. And my client said to me, I think if we come in fairly clean, 30 over, what do you think? I said, I don't know. I think it's quite a bit underpriced. Anyway, 10
Yeah.
offers, 200 and something over.
I had a client call me about it and it was assessed here. The asking price was here and called the agent and they said, there's no way it's going to have to go higher or they're not.
Yeah.
Oh,
Yeah.
okay. Carry on. Choose.
And that's another thing. It's really frustrating for some of the buyers out there. I've got this client and he saw the asking price at it was on 1,399 for this
Yeah.
house. And I said, it's assessed at 186. I said, it's worth more than that. He says, Andy, the market's come down. I'll pay a bit over. I'll come in with a fairly clean offer. Yeah, over 200 over. The market recognizes fair value and I just think that's still a very in demand or high demand segment of the market for those clean, fairly move-in ready homes in that 1.5 to 1.8 range is a pretty attractive level for a lot of people.
It's the same house we're talking about.
You might have been one of the 10, but
You know what? We weren't, because I called my client back and I said, I spoke to the agent and this is not for us. It's going to be a gong show or they're not going to sell it.
Yeah. Yeah. So to answer your question, I think, again, move-in ready, nice, clean homes, nothing fancy, but a nice, a home that provides utility in a nice, stable, family-oriented neighborhood, high demand.
Yeah.
Much more so than a 2-bedroom condo.
Yeah. So
Right.
I think for me, the main takeaway for that is where we're seeing opportunities is in some of the product that needs a little bit more love and attention. Some of the condos where things are still moving along fairly stable. Like if you're coming out of a townhouse or you're coming out of a half duplex, like you can still do reasonably well. Those values have been really well supported. And then if you want to trade up and take advantage of some of these other kinds of properties, that's where the real value lies right now. But to your point earlier, you need somebody to sort of guide you through that process to help you say, okay, well, here's where we are. Here's where we want to be. This is what it was. This is what it is. And how are we going to make this as frictionless as possible so that you can take advantage of this and move your people and your life into a place that's going to be better for you long term and more comfortable and a better fit for your lifestyle. So I have an idea. Call us.
It all boils down to, for a lot of people, especially for the move-up people, it's just a differential. It's what do we walk away with when we sell our place? How much do we have to pay for the next place? So whether you're moving up and how much that differential is in order to get to that next place, or maybe you're moving down, you're downsizing, what are we going to pocket? And that's really what it comes down to. And at the end of the day, it's that differential that really should, in most cases, drive whether or not it's the right property at the right time. But when people focus on the differential, then they usually make a much better decision than saying, oh, my property's fallen by 15%. If that's all it's worth, I'm out of here. I can't do this. No way. When if they look at the big picture, there's never been a better time, or this time that exists right now is definitely an opportune time. That gap between your home and the move-up home is narrowed. And if you look at the pure numbers and what it's going to cost you to sort of make that move, you might find that this is a really great time to make that move. You just got to sort of be able to stomach the blow on maybe what you're going to sell your place. But if you can deal with that, hey, great time to do this. And as chances are, when you are offering on your next property, because most are not selling with 10 offers, that's pretty unusual. That
Yes.
property was intentionally underpriced to create a bidding war. But if they're priced like most, which is at or around market, chances are you're not ending up in a bidding war. You've got time to do your due diligence. It feels comfortable. It feels right. You're not being pressured. It's just a really comfortable time to make this move in the
Yeah.
current market, which if I go back to the 32 years that I've been selling, and Jeff, I know you've been doing this longer than me, so you're really the true veteran amongst the two of us. This is a very comfortable time to buy real estate. How many years out of those 32, 34 years are you buying a home or helping someone buy a home and it's multiple offers and it's a bidding frenzy and there's 120 pairs of shoes at the front door of the open house?
Oh,
I mean, that's been the majority of the time. This is a really comfortable time. You know it's comfortable because the buyers, the selling agents, the listing agents, I should say, call you back right away. They want your business. Yeah, they'll do anything. They'll even buy you. They'll even give you a gift card to,
yeah, the turkey. Yeah.
whatever. They want you to come in and buy the property, make it easy as possible. So for the buyers, truly a fantastic time to make the move,
Yes,
right?
absolutely. And if we can make our listings easy to show, present them well,
Yes.
do all the homework in advance, then they also become the ones that are the most active within the marketplace. So
Yeah.
there's ways to work and there's ways to be for all aspects of the market to help both buyers and sellers. And I think, between us 70 years of experience ish, there's probably a few things we know how to do that we can help with.
19 times out of 10, we get it right, I think. Most times.
Heather mentioned something to me this morning we should talk about on the next podcast, the villages concept and the zoning changes that are coming through.
I've had a couple of clients message me in the last 3 days. They got that thing in the mail.
Yeah.
What is that going to do to their property value? So I think, yeah, let's save that for the next one because I think it's a great topic and it's
Yes.
relevant for a lot of people in Vancouver.
Yes.
Do we know how many people or homeowners are affected by the villages? Jill's got that little thing in my ear here. She says 39,000. Is that 39,000 people or that's homes, households? Yeah. Okay. Anyway, so
Okay. So a lot is the
yeah,
answer. So
yeah,
we'll dig into it and we'll put something together.
because I think it's totally relevant and it's the next thing coming down the pipeline, right? It's and what I've told people, I don't think in the current real estate climate, economic climate, we're going to see any dramatic changes to redevelopments right now. I think it's going to be slow because,
Yeah.
again, we're just not in a redevelopment environment right now with the way the market is, but it's coming at some point.
It will.
Right.
I'll make a note. We'll do that. So listen, enjoy your travels.
Okay. Okay. All right. We will stay in touch. I'll send you a few photos along the way.
Give me some photos. I'd love to get the photos. That's
And
awesome.
we're hoping that the rain leaves us behind. It's belting it now, but anyway, that's okay.
Thanks, brother. We'll talk to you. Have a great day.
I tell you about all the best. Talk to you soon, pal. Bye.
Thanks for tuning in today. We appreciate your time and your attention. If we can be of further help or information, we look forward to hearing from you. We respectfully acknowledge that we live, work, and play on the traditional territories of the Coast Salish people, including the Musqueam, Squamish, and Tsleil-Waututh nations.